Segment of my Friday morning coffee. This is my opportunity every week to share a little bit of some of the goings on with real estate from Bowmanville, Courtice, Oshawa, right into Whitby. Just some of the issues that affect us and some of the trends. And I guess the biggest trend that I've seen in the last week, and I think that what seems to be in the news quite a bit, is the changes that Flaherty's made with regards to borrowing money. A lot of the critics out there are really smashing this one. They're looking at it saying that he made some very negative changes. But if you look at why the government did it, it's quite obvious. They think that they can see that the interest rates are going to rise over the next couple of years, and they're backing themselves away. So they don't want to be connected with, if the rates go up and people start having credit issues and losing houses, they don't want to be seen as part of the problem. They want to be seen as part of the solution. So their idea of the solution were three items. The three items that they changed this past week were they lowered the maximum amount that consumers can borrow when refinancing their homes. Why did they do this? Flaherty had said that a lot of times when people refinance their homes, they're buying cars or they're buying boats or taking trips or holidays and things like that. And he said it's not to do with actually doing renovations or increasing the value of your home. And I will agree with that. There are people out there that have refinanced their homes because they're paying things off. But there's also, being in real estate for 24 years, I've seen so many people refinance their homes to do things like help their kids with their education if they're going to university. If they're paying 50, 60, 70,000 in university costs, a lot of parents will put that on their house. So that's the first thing that he did. So what they did was we used to have it that you could refinance your house up to 90% of the value of the home. Now they're allowing you to refinance it only up to 85%. The second thing they did was they reduced the amortization from 35 years to 30. Now again, for the first probably 15 years of my real estate career, 25 years was the longest term you could get for a mortgage. Then they increased it to 40, backed it up to 35, and now they've cut it back to 30. Again, the reasoning is they don't want people getting themselves into trouble, because the longer the amortization, the same payment will get you more, you can borrow more money, which means you can borrow a more expensive home. So they're limiting this. And a lot of the critics, the issue they have with that, not so much as limiting it, they're doing it right across the board. So if a couple have perfect credit and great income and they've got no debt, they're dealt with the same way as if somebody who's got bruised credit and a lot of debt. So it's one of those things that's it's really it's hurting those people that could really afford more and could actually afford to pay it back. The third thing that they did was many banks are going with secured lines of credit. They secure the line of credit against the house. So they approach this in two ways. There's two really different types of lines of credit. Not that I want to get too technical, but one has a payment plan and one doesn't. Now, I bought a car recently, and most of the banks I approached wanted to do a line of credit on my house, and it would be, say, a 48 or a 60-month loan, but it's secured against my house. Those have always been insured by the government. So the bank gets great insurance, and it's secured against my property. So they've got lots of coverage if anything goes bad with that loan. The second type of line of credit is, and this one that I've seen more common than not, is someone who gets a line of credit, say a $15,000 line of credit against their home, and there's no payment plan. All they have to pay is the 3% minimum, and they can keep paying that along. What the government's done is they've said it's okay, we will continue to insure the ones that have payment plans, but the ones that don't have payment plans, we're not insuring. So, of course, the banks will in turn, because of the extra risk, have to increase the interest rate to compensate themselves for that risk. So those are the things. So there's been three things that have changed. Will they make a dramatic difference for resale and or new homes in 2011? I don't think so. People are still going to be out there buying houses. It's tightened up a little bit. But the government is an interesting entity. If you look back about 5 or 6 years ago, the same government that's tightening up the rules, worrying about people getting into trouble, was the same government that actually made the legislative changes to allow people to buy with no money down. Anyways, that's your tip for the week. And if you've got any questions or any thoughts, just email me at lindsay@soldbylindsay.com or just visit me online at soldbylindsay.com. Have a great day.